Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing eBay stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 26 billion market cap. They're trading at $52 a share, and they have 500 million shares outstanding. eBay is an e-commerce company that brokers customer-to-customer and retail sales through their online marketplace in 190 countries. Sales occur through an online auction or the buy it now process, which is what I usually use. They make money by charging commissions to sellers. It has 134 million yearly active buyers and handled over $70 billion in transactions. That was in the past year alone. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Really consistent free cash flow, around $2 billion a year. Decent margins. They converted 17% of their revenue into free cash flow in the trailing 12 months. It is lower than prior years. It was 21% in 21. Net income is the profit or loss on the income statement. It's revenue minus expenses. A really big negative in 2022 due to asset impairments, but improved a lot in 2023 to 2.8 billion. It's 2.6 billion in the trailing 12 months. They also pay a 2% dividend yield, which it looks like they can easily cover. It cost them 547 million, and their net income is 5x that. Free cash flow 3x. Revenue is the sales for the company, and that's why the stock hasn't been going anywhere. It's pretty much flat, $10 billion a year. Even though I use them all the time, I've been using eBay since 2000. I'm just so used to it. And I do like it better than Amazon. I think it's easy to find things. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 38 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $34 billion. We divide that by 500 million shares. And we get a calculated stock price of $67. They're trading at $52, so they're trading at a 22% discount. It's a buy according to the model. There are 45 companies in the same industry as eBay, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $467 million in CapEx, a lot less than the average, but more than the median. Wow, look at Amazon, nearly $50 billion in CapEx, which is double their market cap. They do have a lot of debt. Their debt to equity ratio is 1.3. For every dollar of equity, they have $1.30 of debt. They're one of the few companies on this list that pays a dividend, 2.1%. It's a pretty good dividend. They generate a good amount of free cash flow, 1.7 billion. The average is so high because of Amazon dragging up the average. They rank 8th in market cap. Price to book 4.3. That's stock price over book value per share. A really good PE. They're trading at 10 times earnings. Look how expensive some of these other companies. They're a better deal than Baba, which is crazy, right? Because eBay is an American company. Baba is a Chinese company. And Chinese companies tend to trade a really high discount. And American companies tend to trade at a high premium, but not eBay. They're trading at 15 times free cash flow. A lot better than Amazon, but worse than Baba. Price to sales is 2.6. They generate 10 billion of revenue, less than half the average. And they're not really growing anymore. Their 5-year annual revenue growth rate is 4%. Look at PDD, 79%. I'm going to do a video on them later. If you put $10,000 into this company 10 years ago, you'd be pretty happy at $26,000 today. That's a 10% annual return. But at one point, your $10,000 would have been over $35,000. They just released their first quarter results. Let's look at their slides. Revenue 2.6 billion, up 2%. GMV, the volume of products they sold, 18.6 billion, up only 1%. EPS 85 cents, operating margin 25%, that's down from 30%. And they return a lot of money to shareholders, $500 million in repurchases, 139 million in dividends. Here are some highlights. Advertising revenue 370 million, up 30%, because sometimes companies advertise on their website. Total advertising 384 million, which is 2% of their GMV. They did some touch-ups to eBay Motors, always trying to improve their website. They expanded their consignment service to include luxury apparel. They made things more user-friendly for their sports trading cards division. I think they're the biggest sellers in the world of expensive trading cards. I spent about $25,000 on trading cards with this company last year. I bought a 53 Topps Mickey Mantle, a Jordan rookie card, a Wayne Gretzky rookie card. Here's the Jordan I bought, $7,500. It was rated 8. The 9 and 10 were too expensive, so I just went with the 8. I bought a Cy Young card for $4,200. If a card is graded and over $250, they guarantee it's authentic. Before you receive the card, the seller has to send it to eBay so eBay can confirm it's accurate. Here's the Mickey Mantle 7000. That was rated 5. I bought a Nolan Ryan rookie card. Jackie Robinson 53 Topps. Here's the Gretzky. I'm really just trying to relive my youth. I ended up losing all my cards when we moved from my original home. And I got a nice tax check, an ERC check from my old company. So I wanted to treat myself. Let's look at their income statement. Revenue up a little. It's $2.55 billion. Here's their revenue last 5 quarters. In March 2023, $2.5 billion, then $2.5 billion, then $2.5 billion. I'm rounding it. Now it's $2.6 billion, $2.6 billion. And half their revenue is international. They have 132 million active buyers. That is down from last year. GMV is also down 9 billion to a little under 9 billion. International GMV is up 9.4 billion to 9.6 billion. Let's go back to the income statement. Cost of revenue, 700 million. These are all the expenses directly tied to generating the revenue. Revenue minus cost of revenue gives you your gross profit, 1.9 billion. The biggest expense is sales and marketing, 540 million. Product development, 350 million. G&A, 230 million. And then losses, 91 million. So if you get scammed out of an order, eBay protects you. Total expenses, 1.2 billion. Gross profit minus operating expenses gives you your operating income, 630 million, up from 558 million. Net income, 438 million. That is down from last year. Because last year they had a gain in other, 200 million. This year a loss. So the EPS, 85 cents. And they bought back a lot of shares. It was 537 million, now it's 516 million. 21 million shares. As a percent of their total shares, it's a lot. Their current assets are 10.4 billion. Current liabilities, 5 billion, so they're really high current ratio. 4.2 billion of their assets are their investments in Aidvinta. This is a European e-commerce company. Total assets, 21 billion, same as last year. Liabilities, 15 billion. Long-term debt is their biggest liability, 6.1 billion. Assets minus liabilities equals equity, 6.3 billion, a little less than last year. Let's peruse the statement of cash flows. Operating cash flow, 615 million, down from 840 million. Investing cash flow, 140 million of PP&E. Then the purchase and sale of investments. These are likely short-term investments like commercial paper or bonds. They bought 450 million of their own stock, more than last year of 240 million. 139 million of dividends. Let's look at the company on Simply Wall Street. Its last price, 51, 26 billion market cap, up 1% in the past week. They've done well in the past year, up 18%. Let's see what they say about the company. eBay operates marketplace platforms that connect buyers and sellers in the US, the UK, China, Germany, and around the world. Their main site is ebay.com, but they also have other off-platform businesses. They were founded in 1995, almost 30 years ago in San Jose, California. When you adjust for stock splits, it was trading under $2 a share in 1998. Its highest ever was at the end of 2021, over $8 a share. A year after its peak, it was cut in half below 40. I don't think this company is going bankrupt, so that would have been a great time to buy it. But it's come up a little since then, but still trading at a pretty nice discount. Simply Wall Street is really bullish on this one. They're at $86 a share. They say it's 40% undervalued. 26 analysts priced this stock at 52, so they don't see any upside with this stock. The revenue forecast for 2026 is 11 billion. That's by 18 analysts. The free cash flow forecast is 2.4 billion. That's by 6 analysts. Their revenue was higher in 2013 at 15 billion. Its peak was 16 billion in 2014, but it's down to 10 billion. This red line is their debt, blue line is their equity. They used to have a lot more equity than debt. Now they have a little more debt than equity. But this green line is their cash. Cash is a little higher than their debt, so they're in good shape. They're paying their next dividend on June 13th. So in little less than a month, the ex-dividend date is May 30th. So you want to own the stock before May 30th to get that dividend. Their yield in 2019 was 1.5%. The forecast is for the yield to be almost 2.5% by 2026. The CEO's salary went from $700,000 to $1 million. Total compensation $22 million. Tenure as CEO 4.1 years. Before coming to eBay, Jamie was CEO of Sam's Club. In the past year, only insider selling, no buying. That doesn't make you feel too good about the stock. 94% of the company is owned by institutions, 6% by the general public. Their biggest shareholder is Vanguard at 12%, then BlackRock. Natixis subsidiary Morova owns 1.8%. Northern Trust 1.25%. Invesco. Lyrical, the New York City asset manager. They've been trimming employees. It was over 30,000 in 2013. Now it's 12,000. And the ticker trades on the Nasdaq, Mexican Bolsa, Deutsche Börse, Swiss, Zitra, Santiago, EuroTLX, Wiener Börse, Bulgaria, BATS Europe, Sao Paulo Bolsa, and Buenos Aires Stock Exchange. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.